Good afternoon, everyone, and happy Friday. Welcome to Stock Market Today. Allie Corman, Ed Carson here with a breakdown of the action in today's session and this week. And we did finish the week on a positive note with strong gains, but there's a lot of caveats to talk about, Ed.
Yeah, it was a whipsaw market. It was nice that we whipped higher to close it out. Sort of went nowhere for the week in a way. Going to take a look at Microsoft. We're going to take a look at Apple, and we're going to take a look at Ford, which has earnings next week.
Yeah, some three big names to discuss there. But first, let's dive in to market conditions. So let's take a look at the NASDAQ composite here. Finishing Friday with a strong gain, up about 3.1%. We had the S&P 500 up 2.4%, the Dow up 1.7%, and the Russell 2000 up 0.8%. So if you just talk about the percentages alone, those are very strong percentages, but there's a lot to talk about here in terms of levels that we're looking at, volume needed as more of a signal that this rally is something that is looking like it's going to stick.
Yeah, just to go through the week, on Monday we have a market rally that started because we had these huge losses. I believe the NASDAQ was down almost 5% intraday, came back for a modest gain. So there's that. Then we sort of traded within that range. I mean, on Wednesday afternoon, we briefly popped above it when just as the Fed meeting concluded, because there was the NASDAQ was up 3%. And then we erased all those gains. So since then, it's been these whipsaw moves. So today we had this big move, and this doesn't even really show it because this is 2% and it's actually 3%. So it got a lot higher. But even so, today's action is inside Monday's trading. So there's that. The price action, okay, so that gives you a caveat even on the price action. And then more fundamentally, volume appears, and it's always possible there was a last minute surge, but as we started the show, it appeared that volume was going to be slightly below Thursday's volume. And for a follow through day, you don't not only need big price action in one or more of the major indexes, but you need higher volume. And there was lighter volume apparently on the NASDAQ and NYSE. So so there's that aspect. It's positive. But I think one level on this is to get above 14,000 would be nice. So in many ways, this would almost be like, sometimes we talked about a setup day. I'm not saying that Monday has to be, but if we then rally had a strong day and we got above this week's action, strong move, got above the 14,000 level, and on the S&P, the 200-day line, I think those would be positive steps. Maybe it give you more of a feeling that there's a real uptrend here.
Yeah, we're really keeping a close eye on that 14,000 level. The NASDAQ closing today at 13,770 and change. And now let's also take a look at the S&P 500. Strong gain on Friday as well, up 2.4%. Back above that 4,400 level, but still below its 200-day.
Yeah, so it does look like it got around to the top of the range Monday, but yeah, the 200 days is still there. And I think there's something else. Is like we have talk about, you also want stocks to know not all confirmed rallies. When we do get a confirmed rally, not all of them work. And there's reasons to say, well, I mean, stocks aren't looking that great. There's not many great looking stocks, which is one, there's not a whole lot to buy, but it's also probably not a good sign for the health of the rally if you don't have that many stocks to buy. So in 2018, we had a three-legged bear market where there were two strong, we had follow-through days, and then they almost immediately failed. So that can happen. It just means, so you want to pay attention to a confirmed rally if and when it happens, but it's also not a guarantee that it'll work. And if we don't have a lot of things to buy, that can also keep you from, getting heavily into the market. So a lot of caveats, that we can go on and on and on about, but certainly a lot better to have a 3% gain in the NASDAQ than another loss. That's for sure.
Yeah, so just one potential scenario that could play out, which is why when we do get a follow through day, that's why we start dipping our toe in the water. Don't want to get too aggressive. So we'll be keeping tabs on condition minute to minute, as we always do, because it can change so very quickly. And something else that you were mentioning, you talk about setups. The groups that have been working mainly in oil and gas are extended, and traditional growth names have a lot of work to do. So yeah, finding those setups, at least at this moment, seems like it would be on the difficult side.
Yeah. So if we took some more time, to before a breakout, or that wouldn't be before a Father Day, wouldn't be the worst thing in the world.
All right, well, let's take a look at Apple because it has earnings out of the way, and we were talking about how it's been holding up very well compared with other mega cap technology stocks and strengthening by the end of the day. It looks like Ed up about 7%, retaking its 50-day line, and an earnings report that showed decent growth, although deceleration from the quarter before. But the technical health here is looking pretty compelling.
Yeah, I mean, in a normal market, this one like, oh, it looks pretty bad. It's breaking through the 50-day line. But as you can see, that relative strength line, it really did barely budged, right at highs. And then today, it just gapped right up. And again, now it broke a trend line, got above the 21-day line, above the 50-day line. People who know me know that's the kind of thing that I like to see. But I'm standing back right now. I'm still like, because I'm uncertain about the market. But this would normally be flashing some early buy signals. There are a lot of things to like about it. But so definitely encouraging, definitely should be on your watch list, because it's holding up better than just about any other tech out there.
Yeah, I mean, a great follow through day is explosive and decisive. So, with all the caveats that are out there, the market still has to prove itself to us, but we'll keep names like Apple on our watch list. And Microsoft also worth visiting as well, up about 2.8% on Friday. A nice upside reversal at the 200-day line earlier in the week. Earnings are out of the way for Microsoft as well. And this was one of those glimmers of hope earlier in the week with a positive reaction to its guidance. But then we had the Fed news. So Microsoft being a long-term leader, it is kind of still right around its 200-day line. So a potential setup here to keep tabs on.
Yeah, I mean, in theory, like, if you wanted to, you probably could start a position in Microsoft. It's a correction as a long-term leader. I mean, you start as that kind of thing. It may or may not work, just like anything else. And so if it reverses on you and you start getting losses, you'll have to get out of it. Like, if it breaks below, say, yeah, I think Tuesday's low would probably be a good place to be exiting out. But it's above the 200-day line, not too far. It's sort of breaking a trend line. It's right at the 21-day line. So there's some positive things. Again, the market reverses and all this goes to naught. I mean, that we've seen this so many things. It's like all this strong action. It's like, yeah, and then the market reverses from up 2% to down 2%. Guess what? There's not many stocks that can withstand it. But all in all, when you add Wednesday, Thursday, and Friday, pretty strong reaction to earnings. The relative strength line actually isn't that far from highs. I mean, it's, you look at the price action, there's been some decline, but it's not that bad, all things considered.
All right. And we have Microsoft about 4% above its 40-week line and 4% below its 10-week line. It's kind of right in the middle of there. Yeah, we'll keep a close eye. I'm definitely interested in keeping a close eye on this long-term leader, one that has performed well in 2021. So good to see that support at the 40-week. And we have earnings coming up next week for Ford Motor. A little bit of damage that this one has suffered in the last couple of weeks, down over 5% this week, and now below its 50-day line / 10 weeks. So in the past 2 weeks, Ford definitely triggering some sell signals here. But what do you think about how it's doing heading into earnings next week?
Yeah, I mean, it was sort of impressive that it tried to make that move as it did in early January, and then it all went away. Boy, it would have been nice if it could have just gone sideways instead. Look, this needs time to repair. It just does. It hasn't broken down in a way. The relative strength line is just where it was at the end of last year. So it was almost like, marching into battle, then marching right back, realizing you do that, but they haven't lost that ground. So I don't know. It's going to take time, even if there's strong earnings, it's going to be a while, but I still think that this is one of the leading traditional automakers. And it's not just it's also going to be important for what Ford and what GM have to say about how is auto production coming back, not just the earnings, it's so much the forward are they going to be able to ramp up and get somewhere to normal by later this year? Is EV production going to, how that's going on? And I think those are kind of messages, and just give you an idea is, this industry, can it mount another run? Though, unlike Microsoft and Apple, I mean, this straight vertical drop, there needs to be some repair work. If this rebounds over the 50-day line, it would still look really weird and strange, and probably should be, so hopefully it doesn't do that, and hopefully it sets up well.
Yeah, that reminds me of that metaphor that was brought up recently on IBD Live from Scott O'Neill, son of IBD founder Bill O'Neill, talking about a sprained ankle versus a broken leg. How much damage a stock has taken on might require more time for it to heal, so to speak. So something to keep in mind here with Ford, but earnings potential catalyst, and it's an interesting space. And we know so many investors are very interested in the EV landscape, so it'll be interesting to hear what Ford has to say next week. And Ed, let's also talk about preparing for the week ahead, because it's been a little crazy lately, but we are seeing more signs of hope out there in the market.
Yeah, there definitely are, and it's encouraging. It was nice to see that, and it's amazing how some of those stocks that seem this close to breaking down, all of a sudden, hey, you get a couple more days, and all of a sudden they won't look, start looking interesting. But I think it's like, look, Wall Street is in New York City, but this is really, I think investors should be sort of in the state of mind of Missouri. It's the show me state. We are in a show me kind of state. Don't just show me like a few minutes of good action or even one day. I want to see real strength in the market. If you end up like, oh, if only I could have bought right here, I could have gotten a little early, but I just wait for that clear signs that the market and stocks are in good position, and then gradually build up your exposure. And that's if we have that. I mean, we don't have that right now. So I would definitely say this is a weekend to build up your watch list, maybe really try to find stuff that is in position, because we could have a fall through on Monday. Maybe we will, maybe we won't, but don't force it. Don't force it either. I mean, we're all going to be excited. I think all of us behind us saying, ooh, that was neat. That's neat. And we're all that, but we also have to tell ourselves like, wait a second, this could just be a little blip, and then we could reverse lower very quickly.
Yeah. I mean, I think it's better to have FOMO in a strong market rally than to try to have FOMO at the potential bottom. So you want the odds to be in your favor. It sounds so basic and we say it all the time, but really, missing out on 1 or 2 days at the bottom versus the potential upside of saving your portfolio and protecting your mental capital too is very important. So we'll have to see what the market shows us next week. All right, Ed, thanks so much for all your insights, and for everyone for tuning in. We'll be back with more next week, of course, starting off with IBD Live, our daily morning live stream. So tune in. There's going to be a lot for the panel to discuss. And we also have 2 webinars coming up next week. We have our Swing Trader Scorecard on Tuesday and our Leaderboard Scorecard on Thursday. So a lot of fun to be had. So mark your calendars. Looking forward to another interesting week potentially. So we hope you all have a great weekend, and we'll see you back here Monday.